Hello, everyone. Jonathan with Bull Volume, and we have a market recap video today looking at where we ended the week, first full week of January. A lot of red. You can see all the major indices were down considerably. Um, just a lot of bearish conditions, advancing declining line, new highs, new low, SMA for the 50 and 200 all pointing to bearish conditions. So, with that, I want to give you one swing trade setup I'm placing for the upcoming market week, and that you could take that and place that's going to be able to be on the bearish side of things. So with that, I'm going to flip over to Thinkorswim platform, walk through some charts and how I analyze the market day in and day out for effective swing trading. I've got the Thinkorswim platform here. This is setup I use each day. And what I like to do is just start with the market health and then split that between large cap and small caps. I do that by looking at the IWB and the IWM, so the Russell 1000 and the Russell 2000, to see overall is the market in a position to put long entries or short, and then also what market caps are in play. You can see both have on the weekly chart -5 EMA. We got the MACD both declining and negative. And so I combine that and just say that's a no entry condition for any new long entries for me. And then from there, I'll look at sector splits to see if there's specific sectors that are showing strength. And you can see across the board, we've got a lot of weakness. We've got consumer discretionary where it's been in a large run up, where the MACD is still positive, but momentum is declining. The only sector that's showing really any strength is energy. You can see we've got on the weekly chart, positive 5 EMA slope. We got the MACD curling up. And then on the daily, you can see we've got a lot of back and forth over the past year, but we have hit this bottom and we've been on a nice run up here. The last market day on Friday showed a big red bull volume day, so that means higher than normal volume with bearish price action. So before that, we had a lot of bullish bull volume conditions, but Friday was a big signal that energy could take a breather, and you take that with general market conditions showing bearish. Would not like to go along with any energy trades at this point. So all that bearish news, what do we do? Well, as swing traders, we can look at some ETFs that give you inverse exposure to the market. And here's my scanner where I look at ETFs, and I've got one natural gas, really similar chart to that XLE where we've had a nice run up. But I think we're pretty extended here as far as just moving from a low of 22.85 all the way up to a high of 26.49. So I would not be looking to go long on natural gas FCG ETF. But if we look over here, this is an inverse ETF of the Russell 2000. I've actually got my entry set for Monday, and you can see that we've been in a long downtrend, but our 20 EMA has now crossed over the 60 EMA. We've got positive 5 EMA, bullish bull volume indicator. The MACD is now positive and rising. On the weekly, you can see we've been rising on the 5 EMA. We've got the MACD that's both positive and rising, and we've got bull volume that is bullish as well. So everything is telling us that this is really the first time in over a year where I would say the conditions start to show that it's time to start looking at some short entry, some bearish. And if you trade in an IRA account like I do for swing trading, the way to get that exposure is through inverse ETFs. And so RWM is a inverse of the Russell 2000. So that's an entry I'm looking to place. Something I have on my watch list is LabD, which is inverse of biotech. It's a bearish 3X ETF. And I look for breakouts, and they've got to close above the 20 periodontian channel. And you can see we are right there. 20 periodontian is at 744, and we close at 740. So this could be an entry that I'm looking to place maybe Monday if it confirms that price action, and we'll go short the biotech sector as well, which typically is made up of small caps. So that jives with the IWM being on a downward spiral, and if we're gonna take it inverse with the RWM. So that's what I got for you as far as setups. That's that ETF, the RWM, is what I'm looking to enter into. Now, if you are still looking for long entries, I do have my scanner here, what I look at for stocks. So I look at 20 period breakouts, and I also look at anything that has sold off pretty heavily and then is starting to curl up. So reversals as well. And one chart that I think looks pretty nice is Albertsons. This is a consumer staple, so a defensive play. You can see we had this massive sell-off day, um, really flushed out price, a lot of stop losses hitting the low of 17. We just had earnings, and you can see we just hit a 20 period close high. Nice consolidation here with all the EMAs pointing up. So if you're still feeling on the bullish side and wanting an idea, I think Albertsons would be a good entry if that's what you're wanting to do, take a little bit more risk. But like I said, I'm avoiding any long entries at the moment. The market conditions just don't point to that. XLP specifically, you can see has been in a heavy downtrend. Now, if we do start to get to a defensive posturing, we could see XLP, XLV has started to curl up a little bit. Some of these more defensive plays, the utilities as well. You can see we've got some consolidation there. So something to have on your radar is if we go more of a risk off defensive play, then some of these sectors that are less cyclical might come into play. But right now, I think that the play is for Monday to short via an inverse ETF, the Russell 2000 small caps, and see where that takes us. Hope you found this helpful. I do have a link in the description to my bull volume indicator. It is a volume-based indicator that looks at bullish and bearish price action. The green bars are going to show it's a above average volume with bullish price action. The red is above average volume with bearish price action. And anything just a normal volume color is really an indecision point, low volume, low price action to confirm any price movement. I think it's a really critical indicator to have, and it's something I've been using for a lot of years with a lot of success. And then I've also got a MACD squeeze indicator that combines the MACD with some what I think is a little bit better color scheme than the out-of-the-box Thinkorswim, and then also 2 levels of squeeze, Bollinger Band Keltner channel squeezes, the 1.5 ATR and a 2.0 ATR factor. So got that in the link description, bullvolume.com. Otherwise, thank you for watching, and God bless.